Welcome to the podcast about venture capital, where investors and founders alike can learn how VCs make decisions and reach conviction. Your host is Nick Moran, and this is The Full Ratchet.
Welcome back to TFR for another edition of Investor Stories. On this segment, the experts talk about a startup that failed and the causes of that failure. Here's the segment called Mortems.
On today's special segment, we have Karen Page of B Capital. Karen, can you tell us a story about a portfolio company that failed and why it failed?
I am brand new to this space, so I haven't made investments at this point in my venture capital career that have failed. So I'm smart enough to know that one day I won't be able to say that anymore, but for the moment, I will relish in that.
Enjoy it. Any angel investments that common threads of failure or, issues that ultimately prevented, a successful outcome?
Yeah, a few of my angel investments that have failed, the primary reason they have failed was lack of ability to find product market fit.
On today's special segment, we have Zhuo of Fika Ventures. TX, tell us a story about a portfolio company that failed and why it failed.
Yeah, it seems like it hasn't worked for us. And a lot of other VCs have been successful at the incubation model. And we embarked on the incubation model with Fika One back in 2017, where we thought, hey, we were both founders before. It should be pretty easy to incubate a company and help them get off the ground. So we incubated a wealth management company that was trying to provide a SaaS platform to mid-market wealth managers, provide them all the tooling they needed to interact with their clients. And we thought that this was a great idea and validated it with, I would say, like 10, 15 individuals. So we hired an amazing product manager from PIMCO, and we also brought in a seasoned engineer to start this company, and we split the cap table from day one. When the going got tough after about 6 to 9 months, what we realized was this was us imposing our idea on the founders. And this was not something they were truly passionate about from day one. So we ended up in a situation where the founders didn't want to work on the company anymore. And we ended up shutting down the company. So I think it taught us a very important lesson that I think it's like commented earlier on, that we really need founders who are doing this for the right reasons and who are passionate about the problem that they're solving. It can be us imposing sort of our ideals on the company.
On today's special segment, we have Greg Sands of Costa Noah. Greg, can you tell us a story about a portfolio company that failed and why it failed?
Well, so we invested in a repeat founder with a team that we love, absolute technical brilliance. And we tried to apply machine learning to software quality, particularly in the microservices environment. And this is one where ultimately the company was sold to Google. We got our money back. The founders ended up in great roles there. And actually it was a safe landing, if you want to call it that, but we didn't succeed. And the real answer is that, we spent time talking to customers. We couldn't find people that cared enough. And a couple of times there was a little bit of a head fake. And the biggest problem was that microservices, which Silicon Valley and the venture community had been talking about for 2 years, were not yet in production in nearly enough volume. We were just too early. We were too far ahead of the market. And that's always painful, because 2 years later, microservices have continued to grow at an absolutely torrid rate. I wish, we still own the business and we were working together on it, but being too early is as bad as being too late.
Do you ever, in a situation like that, if you can sense that the market is, taking longer, do you ever kind of pump the brakes and extend burn and say, look, we should let this incubate, cultivate for a while before we go all in? I'm thinking about some deals like, for instance, an ESG deal that we're looking at, and it's a wonderful deal. And we talk to prospective customers and they're like, it's coming, but I don't have a significant ROI based motivation to pull the trigger yet. So it's hard to know when it's coming.
This I think is actually a really important point. So premature scaling is the number one cause of death for startups. It's one of the reasons that the big multi-stage firms are so bad at working with early stage companies, because they're trying to return a multi-billion-dollar fund, go big or go home, right? Well, if you go big or go home at seed stage, then 90% of the time you go home. So to me, the thing is, you basically don't start scaling till you see the whites of their eyes. The whites of their eyes is product market fit. And there are clearly stages of product market fit. But broadly, I'd say one of those key skills of a founder and of a good venture capitalist working with a founder is to say, given what the market is telling us, how fast should we go? And when you're in that world where the market hasn't taken off or you don't yet have product market fit, your job is to stay compact and then accelerate into success. And this is an anecdote, but so we have a company called Leap Retail, which is basically, you can think of it as outsourced physical retailers for direct-to-consumer brands under the brand's name. This is the company that was most exposed to COVID. So they were just starting to scale when the pandemic hit, and they literally went into hibernation. They cut everything they could cut. They, basically got really compact. They made the capital last until the end of pandemic. And then they basically were able to accelerate as the world started to open back up. They just did a $35 million financing led by BAM Elevate. And we just had them talk to our LPs at our annual meeting because they managed that perfectly. Wow. And are now in a world where basically there's more demand than they can service and every piece of physical real estate is available to them. So that's a great example of why it's so important to take those signals of the market and hit the brakes when that's what you see. And obviously we're in a period where we're sitting on the edge of a recession and people are making those decisions in real time.
It's a tough topic, because the industry is kind of predicated on growth at all costs. And I just had a debate with another investor on a board very recently that, had a 12-month bowler of ARR and wanted to see it up to the right and, take on any customer you can, grow at all costs. And I was like, whoa, we're a mile wide and an inch deep on these customers. We have not found product market fit with an ICP. Let's pull back and let's make sure we've found, what's striking the chord before we press the gas. And it's tough because there's a lot of differing viewpoints.
Yeah, exactly. And in this environment, obviously, at all times, you're making a decision in the fog of war, and it's foggier now than it is most places. There's lots of fear on the streets. And I think it is clearly important to, save where you can, not make focus on the couple of most important things. But it's also very market specific. And we've got a portfolio company called Elation, leads the category of the enterprise data catalog. And beating quarters, accelerating, unit economics are fantastic, launching new products that we think have the ability to expand our footprint in existing customers. And my point of view is, there might be recession looming, but the market is telling us to keep going.
Yeah. Right? There's always a place for, if you can expand your customer's top line or expand their margin, there's always going to be a place for your product.
That will conclude this installment of Investor Stories. If you're enjoying the program and would like to see it continue, take a moment and leave a 5-star review in iTunes. Also, if you'd like updates on new content from TFR, as well as the top 10 VC articles every week, go to fullratchet.net and sign up for the newsletter. Okay, that will wrap things up for today. Until next time, over-prepare, choose carefully, and invest confidently. Thanks for joining me.